行都快开不下去了。
Banks are almost unable to operate anymore. 36 banks have gone bankrupt and been dissolved. No, they have been merged. They were merged by Liaoning Bank, including assets, all liabilities, and employees. This business is difficult to do now. There is no cash flow. Banks cannot survive, let alone private enterprises. Indeed, China's banking industry is now facing a wave of bankruptcies. Official data shows that from the beginning of this year to July, at least 50 small and medium-sized banks have been dissolved or merged, while 77 banks went bankrupt last year. In 2024, on July 25th, Dongguan Bank was approved to acquire Dongguan Chang'an Rural Bank and set up branches. On June 20th this year, Dongguan Rural Commercial Bank absorbed Huizhou Zhangkai Dongying Rural Bank and Dongguan Dalong Dongying Rural Bank. On the same day, Liaoning Rural Commercial Bank absorbed and merged 36 small and medium-sized rural banks. It was also revealed that even bank presidents have resigned. Bank presidents have resigned. What is going on? After missing the board of directors meeting, Bank of China Governor Liu Jin suddenly announced that he had resigned from his positions as vice chairman, executive director, and president for personal reasons. As soon as this news came out, it immediately aroused attention and speculation from all parties. Who is Liu Jin? That's a heavyweight in the financial world. Before the Bank of China, he worked in many important financial institutions, such as the Industrial and Commercial Bank of China, China Development Bank, and China Everbright Group. Liu Jin's resignation forced everyone to re-examine the challenges and difficulties currently faced by the banking industry. Market competition is becoming increasingly fierce, and state-owned banks still occupy an important market position. However, with the continuous development of joint stock banks, commercial banks, and rural credit cooperatives, various financial institutions are doing their best to compete for market share. Take the loan business as an example. In the past, companies and individuals had limited choices when lending money. However, as more financial institutions come on board, customer choices increase. To attract customers, banks have had to take measures to drive down loan interest rates, leading to a fierce price war. Although this kind of price competition can attract customers in the short term, it also challenges the profitability of the entire industry. According to relevant statistics, banks' average loan interest rate has continued to decline in recent years, especially in the fields of small and medium-sized enterprise loans and personal consumption loans, where competition is fierce. Some banks do not hesitate to cut costs to compete for high-quality customers. Nowadays, banks lend money, and some account managers even do not hesitate to buy loans in order to achieve performance. What's the meaning? To put it simply, the customer does not need money, but the account manager asks the customer to borrow money first and return it to the bank after a period of time. The interest generated is paid by the account manager. The same is true for deposits. In order to attract deposits, various banks have tried their best. Sending gifts, organizing activities, and various preferential policies are emerging one after another, which causes banks' deposit costs to continue to rise. Moreover, with the development of various online financial products, their yield rates are often much higher than those of banks, which also puts huge pressure on banks' deposit businesses. In addition, banks are facing asset quality issues, which further exacerbates current operating pressures. Some companies cannot repay loans on time due to operating difficulties, which increases bank non-performing loan ratios. On the other hand, the fluctuations in the real estate market have also brought great risks to banks, especially in some third and fourth tier cities where the real estate market inventory pressure is greater and housing prices have fallen. Banks' real estate loans are facing greater risks. What I fear most now is abandoning the house and cutting off the payment. Think about it. When you bought a house for $1 million, you paid a down payment of $300,000 and a loan of $700,000. Now that the house has dropped to $600,000, you have to pay back the loan of $700,000. The rise in non-performing loan ratios is fatal for banks. Banks need to use a large amount of funds to offset non-performing loans, which will reduce the bank's profits and affect the bank's capital adequacy ratio. To deal with the risk of non-performing loans, banks have to strengthen risk management and improve loan approval standards, which in turn affects the bank's business development to a certain extent. A Financial Times columnist pointed out that unlike central banks in other countries adopting loose monetary policies, the People's Bank of China has gone in the opposite direction, raising interest rates on long-term government bonds and publicly criticizing some rural banks for purchasing government bonds. Bonds have become investors' top choice amid downturns in the stock, real estate, and deposit markets, a sign that China's bond market is sending out urgent deflation warning signals. In addition, economists at Morgan Stanley warned that China may repeat Japan's deflationary mistakes in the 1990s. Although official data shows that the non-performing loan rate in the second quarter of 2024 was 1.56%, down 0.03 percentage points from 2023 and lower than Hong Kong's 1.79%, difficulties in withdrawing funds still exist. Since the run on rural banks in Hebei in 2022, many banks have lowered the transaction limits for non-counter channels. Netizens reported that some banks have set the daily limit for bank cards to 5,000 yuan, and the account non-counter payment limit shall not exceed 5,000 yuan per day. Not only that, many banks in Shenzhen have also implemented strict withdrawal restrictions. Some banks require that withdrawals of more than 20,000 yuan require an appointment in advance, and withdrawals of more than 100,000 yuan require an application 1 day in advance. Chen Sheng, a Hong Kong man who has moved to the UK, revealed that after selling his property in Shenzhen, he deposited the funds in the Shenzhen branch of the Bank of China. Currently, he can only gradually transport the funds back to Hong Kong when he returns to Hong Kong to visit relatives. Some netizens posted videos pointing out that it's too troublesome to withdraw money and that the process set up by the bank does not consider the people at all. Yesterday, I went to the bank to get money and the staff asked me how much I wanted to withdraw. I said it was 200,000 and he asked me if I had made an appointment. Now you still need to make an appointment to withdraw money, so isn't this my own money? The staff explained that in order to prevent telecom companies from withdrawing money on their behalf, if you exceed RMB 50,000, you must make an appointment at the bank. Later, I made an appointment and went to pick it up this morning. Then the staff checked on the spot again and asked why I wanted to withdraw cash. I said I would pay the wages to the employees, and then the staff said they could pay them on my behalf. I said no, I would find the cash myself, and then the staff introduced me again, saying that he would do the payment on my behalf, which would reduce the risk of cash payment. They asked me how many people there are. I said there were about 10 people in the company. When the staff heard this, they asked me many times to transfer my public account to them to pay wages on their behalf, saving time and cost and improving efficiency. I said it was really unnecessary, but the staff kept trying to persuade me. I was a little anxious. I said it was up to me where to open a public account. When I made the appointment, I made it clear that I wanted to withdraw cash. The staff struggled for a long time. Seeing my reluctance, their attitude immediately changed. At that time, there was a guy on the scene who was also arguing with the staff in order to withdraw 50,000 yuan. The staff had a very tough attitude and said that more than 50,000 yuan must be planned. The younger brother was in a hurry to get the money. He said, "Withdrawing your money, why should I look at other people's faces?" There was a huge quarrel at that time. I took my cell phone and told the staff that you will be getting off work in less than an hour, and many people are waiting behind to do business. Your bank is no longer in the service industry, but in the financial industry. Bank card limits are reduced at every turn. Many business loan customers around me often went to the bank to borrow money last year. Even because their transactions were too high, the card was frozen, and it was troublesome to withdraw the money now. Many people also encounter limitations when making daily transfers. I was transferring money to a friend today and suddenly discovered that my bank card couldn't. I called the bank to ask, and the reply was, "For your card's safety and the protection of depositors' property, we have set limits on your non-counter transactions." I quickly checked other bank cards and found that they all had limits. Unexpectedly, a vigorous transfer limit operation was launched across the country. Individual accounts range from 1,000 to 5,000 per day to 10,000 to 50,000 per year. The bank card limit is only 500 yuan. The bank says it's for your good. Can you accept it? Recently, many banks have suddenly reduced their non-counter transaction limits. This operation has caused a lot of trouble for many of us, and many of us are complaining. I want to transfer money to my family's account. I suddenly found that my transfer limit had been reduced, including transferring some people's salary cards. It was even reduced to only 500 yuan. You said that these 500 yuan may not be enough to cover daily living expenses. Since July, banks in Zhejiang, Shandong, and other places have issued announcements saying that they will reduce customers' non-counter transaction limits, but this has indeed caused great inconvenience. For example, the limit for one card type is 1,000 yuan, and for the other it's 2,000 yuan. It's not even enough to pay Social Security money. So, does the monthly rent also have to be paid? If a child goes to school and pays tuition, and someone goes to the hospital for treatment, how should the money be paid? When I paid, I found that the limit was only 1 or 2,000. We know that the purpose of bank limits is to prevent fraud and being deceived, but you can't let the majority of people be restricted because of the situation of a few people. This doesn't seem very reasonable.
这个好像不是很合理。
People often encounter problems that require thousands of dollars to solve in daily life, such as children's education, family members' medical care, buying a house or a car, etc. Faced with the withdrawal limits of bank cards, these large amount payments are particularly inconvenient. Deposits in the bank cannot be withdrawn at any time, making people question the point of depositing money. The current limit system is unreasonable. Although its original intention is to prevent financial fraud, it may accidentally harm ordinary users. For example, imposing restrictions on commonly used salary accounts seems unreasonable. Although strong supervision is indeed necessary, user experience should not be ignored. Banks should adopt more high-tech means to conduct accurate identification and avoid harming customers rather than using this method to solve the problem. Industry insiders pointed out that bank transfers are just from one account to another on the surface, but the actual situation is much more complicated. If it's a transfer within the same bank, the process is relatively simple. Transfer funds between accounts. However, interbank transfers involve interbank fund scheduling, which needs to be completed through the central bank's reserves, which means that your bank must spend money to transfer funds to the other bank. Bank reserves include statutory and excess deposits, similar to depositors' fixed deposit and regular deposit accounts. These accounts are opened at the central bank, and all transfer operations are performed within the central bank. Bank reserves are part of the base currency and are bank's assets, but they are also liabilities of the central bank. Although the bank's total assets are large, its liquidity is limited. For example, although Evergrande Group had large assets, it eventually defaulted due to insufficient liquidity. Some analysts pointed out that the ongoing banking crisis in China is approaching the limit of the CCP's ability to manage the economy. This may trigger social unrest and expose deep-seated problems in the economic structure. The biggest problem facing China's banking industry is that the real estate industry, which once drove GDP growth and middle-class wealth accumulation, has become the main culprit of the economic downturn. The banking turmoil initially affected smaller banks, and the roots of the problem were already there. Unlike the US, most banks in China are state-owned. The CCP owns most of China's 5 largest commercial banks, while provincial or local government agencies control most regional banks. This structure creates a moral hazard, as banks and borrowers assume the Chinese government will solve their difficulties. However, the government addressed the difficulties through bad banks or asset management companies which purchased banks' bad loans and attempted to revive the bank's operations. As consumer confidence declines, depositors are likely to transfer funds from smaller banks to larger banks, causing more smaller banks to fail. In addition, the fiscal capacity of local governments is increasingly weakening, and they cannot continue bailing out troubled financial institutions. Last year, Chinese provinces issued 31 billion in special bonds to aid small banks that provide large loans to property developers. However, as the real estate market continues to slump, local governments themselves are heavily in debt and unable to continue to provide financial support. If China's financial rescue system collapses, the stability of the entire financial industry will be threatened, which may lead to social unrest. Consumers and investors may turn to hard or foreign assets, and China may face economic disruption, rising inequality, and unemployment. The decades-long economic contract between the CCP and the Chinese citizens may be broken, in which citizens recognize the CCP's rule in exchange for economic freedom.